Welcome to the daily update. This is Being Prepared Monday, October 24th, where we'll look at the action in the market today and then see how things look for Tuesday, October 25th. And the scenario that I kind of played out in Monday's video and over the weekend is that when we often see a strong options expiration Friday, quite often we see a weak Monday after that. Well, that just didn't happen this time. We started off pretty choppy and then ended up going higher. And a lot of our charts are improving. We're turning more positive, but we're getting to the point now because we've been going sideways overall, where a lot of our indicators are starting to get extreme positive, especially in the short term and a few in the intermediate term. So we just want to be aware of that. Doesn't mean they have to stop right here. It just means that we're getting a little ahead of ourselves as far as price movement, but things are starting to turn more positive. There's also a lot of geopolitical things going on right now that will probably get even more intense. Now, some of these don't really have an impact on the stock market. Some of them do when they get to kind of a critical mass point. Others, they see things going on in Washington, D.C., and the market tends to see that as more theater than anything else. They don't really take it serious. But there are some big changes that potentially could happen, and that ultimately could come over into the stock market. So we just want to be aware of those things and see them objectively for what they are. You might have opinions yourself. You might feel one way or the other. That's fine, but that doesn't necessarily mean the market feels that way, nor can you try to predict what the market's going to do based on your personal opinions. That's why we look at charts. That's why we try to get an objective view. That's why we try to look at things as factually based as possible for how's that going to impact the market, even if at all. And then from there, you can then take it to a personal level and have your different opinions and so forth. So we're coming into that, and we're getting into that season with the election coming up. There's things happening all around the planet that you might have personal feelings about, but so far they haven't really drifted into the market per se, but that could change at any time. So let's go back and talk about what happened on Monday. We did have a higher open, and it was a strange open because right for the first, well, as we're going into the open, and then the first half hour to hour or so, it was strange because the stock market was up, the VIX was up, and the dollar was up, and they've been tending to all go in different directions from each other. And so it worked itself out as the day went on and things became a little more equal. Another thing that I noticed, even with the S&P and the Dow doing better, the Nasdaq really wasn't participating in things to the upside. So that's a little bit just to be aware of right now. But we did have a higher open, and prices chopped between the unchanged level and R1 at 37.91. And that's pretty much kind of how the day went. Prices were then able to break above R1, and we closed just slightly above R1. We were up 1.19%, another positive day on slightly below average. That's kind of interesting. We were just about at the moving average there, a little bit below. And the technicals, they're turning a lot more positive now, but we have all these headwinds, and you can see I'm kind of multicoloring the list here. Inflation and interest rates, that's what the stock market is fixated on. Not only what is happening in the US, but outside of the US. We've got the Russia-Ukraine situation. And now, over the weekend, the US has announced that they're deploying the 101st Airborne to Romania. Or they're probably already there because they're trained to be anywhere quickly. Well, that's the first time anything like this has happened since World War II. And so what's going to be the Russian response to that? And will that have an impact on the stock market itself? It looks like they're going to have a new UK prime minister. They picked the former finance minister who they fired, and now they're bringing back him again. And apparently Boris Johnson decided to step aside in that whole situation. We also have a lot of earnings coming out. And then, of course, the recession debate that's going back and forth. The reason I have Fed speak in blue right here is they're on silence mode right now, mute or whatever you want to call it, lockdown. Because there's a meeting coming up pretty soon, there's a window of time where they can't give speeches, they can't give interviews because they might leak something that then they have to backtrack. And the Fed is supposed to be an independent body to make their own decisions. And so they just lock them down. And then I've also added the midterm election that's coming up right now. That could really see a lot of changes or just a continuation of what we have been seeing, but that may not necessarily impact the markets, but it will impact things long term as far as legislation and as far as policy that comes out at the state level and at the federal level as well. All right, so what are some comments? Interesting thing was Hong Kong had a real plunge in Monday's session. They were down 6.4%. President Xi, apparently he's been elected again. It's kind of like what happened with Putin, where he was under a constitution where he could serve as president for 2 terms. And then when that got up, he just created the prime ministership and he was that for a while. And then he came back and when he was president. Well, it's similar to that, where the President Xi is just kind of going to keep being president in China. And that's not a real US friendly type of environment. So that could have some impact as well. And their previous president, he was sitting there in a meeting and they just kind of came up to him and took him out of the room, and nobody really knows where he's at right now or what happened to all of that. So I'm not sure why all that happened, but it's a little disturbing to see those things happening because China is becoming more and more of a force and they're having a lot more influence on what is going on, even though we don't pay attention to their stock market all that much. I look at it every day, but I don't talk about it all that much. They might become more of a player going forward. And there was a time just maybe 10, 15 years ago, as I was looking at the market, I thought China has a stock market. It was kind of surprising. So that's how things have changed, how we switched over to a more global view on things. And China's GDP ended up being up 3.9% after they delayed that coming out. Anyway, the S&P is back to the just below the 3,800 level. So that's showing some improvement that way. And then we're going with the scenario. Now, this one might have a little bit more validity than the previous 5 or 6 that were created in 2022, because this is based on that Wall Street Journal article that came out on Friday that the Fed's going to go ahead and raise rates at their next meeting, November 2nd, by 75 basis points, but then possibly consider not doing as much in December. And the market kind of likes that. And so that's what they're grabbing onto right now. We don't know how long this will last. We have some more economic reports coming out. We have the PCE coming out on Friday and the deflator. And then after that, we have the meeting coming up. And of course, there'll be the news conference and blah, blah, blah. So there's a lot of things that can go on between now and then. But this is kind of what the market's going with right now, is that they might not raise them as much in December. The Dow was able to get back above its 50-period moving average and close above that. I pointed that out. We stopped right there on Friday. Well, we went above that and closed above that in Monday's session. The 10 to the 5 and the 10 to the 2, those yield curves are still inverted, but the 30 to the 5, that is no longer inverted. And I do have the chart to show you that it's gone back to a more normal yield curve. The sentiment is right about in the middle. I think we're at 49. That's right in the midpoint right now. And then Rishi Sunak, and we'll probably learn how to pronounce his name because he'll be a big player. It looks like he will be the next prime minister in the UK. As far as economic reports that came out on Monday, not real big market movers. We had the preliminary IHS market manufacturing. That PMI came out at 49.9. Now that's a little under 50. So that means a slight contraction. The last time we had this report, it was at 52. And then we had the services version of that same report. It came in at 46.6. The last time it was at 49.3. So both of these are showing more economic slowdown. Our trend, it's negative and weakening. We're below the moving average now, but we're still above 20. I have our bias at positive. We had 2 up days in a row, so I kept that at positive. The momentum, I'm kind of reluctantly switching it over to positive. You might say that it could be mixed because we're kind of getting a little overextended here, and there's so many headwinds in the market right now. It's really going to be hard for the market to climb. But at the same time, that's when the market climbs, when there's a lot of headwinds. It climbs a wall of worry. But there's some pretty heavy duty things going on right now. So, and then just to update this, I think I was incorrect when I've been pointing this out. The Phillies did not win in 1929 and 1930. And then I also read something else where they were in the World Series and lost in 1950. And I didn't look to see what the economy was like then. But they did win in 1980 and 2008. And neither of those were very good economic times. The playoffs are over. The World Series will be starting, and Philadelphia is playing against Houston. Of course, Houston is who beat the Seattle Mariners, which was kind of sad to me, but Houston is a phenomenal team. And then they went on to become my second favorite team because they were playing against the Yankees. And that's my second favorite team, is whoever is playing the Yankees. But that's how things are setting up for right now. And I just use this as a distraction. This has nothing to do with the stock market. There's no coincidence between what's going on here and what's going to happen in the market. But so I'm just trying to throw a little bit of humor into all of this. All right. So we're at 49 right now as far as sentiment, and it has been improving as the market has been going up. Here's the weekly look at our other sentiment gauge, where again, this is a few days old now. So it's tipping more into it's in the fear area, but where we're right about in the middle with our fear and greed index, there's still more over to the left with this indicator. And then this is looking at the indexed return of cyclicals. These are things that go up as the economy goes up and down as the economy goes down. And defensive, the things that tend to stay stronger or hold up better in difficult economic times. Then you take out the commodities from all that and you compare it to the ISM manufacturing index. And it just shows that both of these are declining. This is just suggesting that the cyclicals are still in a downtrend, which suggests economic weakness, and the ISM is also declining, which also suggests economic weakness. Then we have this other chart that says inflation will eventually come back to earth. Well, what does eventually mean? It could be a long time from now, or it could be already happening. So, but the dashed line here is the CPI right here, how we went way up and we're coming back down. And this is the way that it's calculated now. Remember, they don't calculate it the same way now that they did back in 1990 or in 1980. And then you compare that to the ISM manufacturing prices paid index, where that has actually been declining as well. We can see over time, these two tend to move in the same direction and they tend to not get very far apart. There's a really wide spread between the two right now. So what's going to happen? Is inflation going to come down, or is the prices paid component going to go back up? But the prices paid continues to be in a decline. Another thing is, what about buybacks? Are companies buying back, whether they're US companies or international companies, are they buying back their own stock? If they're going to buy it and it's going to go lower, that's going to hurt their books. So generally, when you see a lot of buybacks, that's when the market is tending to look more healthy. And way over here on the right-hand side, it's showing that in 2020, there were not very many buybacks. 2021, we were just going through the roof to the upside. 2022, we're doing okay in this category right now. So it's not necessarily really optimistic or really pessimistic either. Then we have the yield curve. It tends to lead the VIX, suggesting higher volatility over the next several years, where we have one of these inverted things here. Here's the 10 to the 2 inverted, because remember, when you look at my chart, it's flipped upside down. This just means, and they're also using a 3-year lead with this as well. And with the VIX going up, that generally happens when the market is going down. So there is some kind of a correlation between these two, but and I'm not quite sure how to take this. You just kind of have to wonder because it's coming up right here where the VIX is actually coming, or interest rates are actually coming down when you do this shift. If you focus way over here, things are telling you a little bit different story. So I'm not quite sure how to take this chart here. This is Bank of America. It's their underweighted in equities, but there's no final capitulation in equity flows where this is the equity allocation. It's really been dropping here. And then this is what money is coming in to be put into the stock market. These are inflows. And typically we'll see these both bottom out at about the same time, and that has not happened yet. The other thing is that a lot of investors are seeing a rising odds of policy pivot in the next 12 months. The blue line going up, this is the percent that say that short-term rates will be lower a year from now. That's actually increasing. Where the light blue line, this is the percent of short-term rates they'll be higher now. That's actually decreasing. So people are seeing this economic weakness, and some of the money managers out there, they know that we're in a high inflationary environment right now. A lot of the interest rate hikes haven't really taken hold in the economy, but they think that in the future, they're starting to think that interest rates will be lower in the future than they are now. Or at least it's going to start coming down. Here's another thing. This came out on Friday. This is the Treasury federal deficit. We kind of cross out the surplus because here's the zero line up here, and we're below that. This just shows where we're at in 2022 compared to other years. That, yeah, we're in a deficit. And even though it's getting more of a deficit, it's not as much as what we saw in 2020 or even in 2021. That was when a lot of the stimulus, all the packages and all the quantitative easing and everything was going. And that was just shooting us down to a real deficit phase. We're still in that decline as far as the increase in the deficit, but it's not as much as it had been. This also, it's kind of an interesting chart. This kind of goes hand in hand with some of the other charts that I show. This is looking back 60 days. So that's roughly, well, 2 months. I don't know if they include weekends or not. They just say 60 days here. That growth has been starting to show some improvement when compared to value. And we do a lot of that analysis. That's what the whole intermarket analysis video is. That's what a lot of the charts are that I show. And this is suggesting that we may have bottomed out here, and we're starting to see growth coming back when you take it into account, looking at a bigger picture of everything. This is also suggesting that investors focus on balance sheet strength increases with recession odds. This is just saying the percent of those that are saying that a recession is likely. This is as of October. It's still pretty high, but this is during the whole COVID lockdowns. And then here, the light blue line is, are they seeing improved balance sheets? And that is increasing, but the recession one is still winning out. Has it topped out, and will it start to come back down? That's kind of what they're thinking here. As far as our RIDEX bear bull ratio, this is as of Friday, and these folks just keep getting whipsawed. We had a really strong up day on Friday. So what did folks do? They got into the bearish funds. So if you really, especially in this kind of an environment, now I realize people have jobs, you have things you have to do. You can't sit around and babysit the market all day. And you come home at night and you have to make your decision. It's like, well, the market was up really strong today or was down really strong today. Okay, well, I get into my RIDEX account and I'm going to switch from one to the other, only to have the next day do the opposite. And that's why we've been really chopping right now. And so this has been quite difficult. But overall, we're still kind of extreme with those folks that are in the bearish funds. And sometimes that can be used as a contrary indicator. In Monday's session, it didn't start off this way. Value was really outperforming growth. By the time we closed, growth was outperforming slightly, but it underperformed with the mid caps, but outperformed slightly with the small caps. But we were green across the board. With the update, we're seeing the VIX really starting to come down on a closing basis, and with the bar chart as well. And the VIX of the VIX is actually declining on a closing basis and starting to come down also. So maybe we topped out back here in the VIX. This was a pretty extreme reading. And the VIX is high, it's time to buy, even though it's not going to feel that way. Well, this has really been retreating ever since that happened, and that's being reflected in the VIX of the VIX also. The Ulcer Index, we're still, this actually is kind of more where we're at on a sentiment level. The moving average is kind of the middle point, the not extreme fear or extreme greed, where we're more neutral. So maybe looking at the daily chart is a little bit more helpful. I still have the weekly chart here showing that fear is still pretty high overall. Then we're down 21.19% from the all-time high. So we're showing some improvement as we're trying to come up out of this. The equity put call ratio continues to decline because we had another up day, and it's declining on our 5-period chart as well. Here are the support levels and resistance levels for Tuesday's session that have been posted on the YouTube community channel. I wish I could post things on Rumble, but they, as far as I know, they don't really have a place where you can do that. Here's the daily chart showing how we were able to get back above the pivot. So this is showing some improvement. But look, we have some other areas that we were in not so long ago, but we are seeing some improvement overall, and we're back above this pivot. And then down at the bottom, where volume is just slightly below the moving average. Then I also recalculated some short-term fib levels. If you go to the August high down to the October low, kind of switch that around a little bit, and then you go to the September high, that's when we hit the moving average and turned on a dime, and then down to the October low, we're getting up to where we're crossing over with a couple of fib levels currently. And this is at about 38. It's really hard to read. It's at about the 3,800 level, a little bit over 38, 3808, 3809 or so. So this is pretty significant overhead short-term resistance, especially when we see multiple fib levels on top of each other. In fact, there's so much on top of each other, it kind of changes the color of this. All right, then longer term, we're coming back up to another area that could be considered to be pretty significant overhead resistance. And it's really hard to read those numbers, but it's in the upper 38s. We're still above the moving average. And now we're also coming up to this level at 3818, 3819, where we have another Fibonacci retracement level. So we're starting to bump into a convergence of overhead resistance. So that could mean that we're due for sideways to down action. If things are going to stay positive, we could just turn and do an about face and start to go down. Or if we're able to break through that, that could really change the whole landscape to be much more positive. We're coming back up to the middle now with our trend channel. So that is looking a little better as well. Sectors, we had 9 out of the 11 were positive, led by healthcare and staples, as well as tech and financials. The 2 areas that were weak, real estate, which continues to show some weakness, and materials ended up being down on the day. Energy is still looking the best as far as the technical analysis score at 99.5. And then healthcare has been able to creep up into the 90s at 94.4. And we still have real estate in last place, where communication, it had been in single digits for a long time. It's now coming back up into the 20s. All right. So over here on the left, utilities up over 50%, going back to the all-time high set in the S&P. Healthcare is in second place. Utilities have continued to slip into third place right now. And we have communication, discretionary, and real estate really taking up the rear, followed closely by tech. Here's just an update of the pink one is the S&P 500 going back to the January all-time high in the S&P, and then how the other indexes have been performing. And we need to see more from the NASDAQ 100 and the NASDAQ if we're going to really get some positive movement to the upside. Technical alerts, well, we had technology had a BPI cross above 20 after going extreme negative. Okay, That's growth. If that can continue, that could help prices go higher. The NASDAQ at first crossed below 10.8, then went back above 10.9. So that's positive. The S&P, even though we didn't close above 3,800, we're just below it right now. And then here is another, oh, I see. The tech then also went above 30. We need tech to improve if our growth scenario, if our scenario that we're looking at that really takes prices higher, we need tech to really do well for that to happen. And then oil ended up going below 85. Our scores, the Dow, wow, look at this. We're back into the 90s. It held up the best even when we've been chopping around, and it's giving us the best technical score right now, followed by small caps in a very distant second at 72.6, where the Dow's at 91. Third place are the mid caps, which they were holding up a lot better as we were going down. Well, they're not doing as good, but they are showing some improvement as we're going back up. In fourth place is the S&P 500. It was up 10, so that's showing some improvement as well. And in last place, but also showing improvement, are the Qs. Okay, intraday. We did have a higher open, and we shot almost all the way up to R1 at the open. Then we came back down. So this is all the choppiness that we saw. Little bit of time we spent going negative, but that held up pretty well. And then we went sideways for a while, went all the way back up to R1, fell back down, and then broke above R1, only to close back down just a little bit above R1. Yeah. So because this is currently picking up, the trend is being negative, that means the ADX is starting to decline and the red line is really going down. Now, if these two lines get to the point where they cross, that could switch things more over into a positive trend, but we're not there yet. And we don't know what it's going to take for those lines to cross. The Arun is showing, not really improving much on Friday, because we're still, see, now we're just at the upper end of where we were at the early part of October. We need to really break out and go this way for the Arun to show a lot more improvement. Looking at breadth, did show some improvement based on price. Didn't have a real strong up day like we did on Friday, a big up thrust day, but it was an up day nonetheless for price and volume. So they're showing some improvement, showing a little bit more improvement with our advanced decline ratio. It's starting to look more positive. The new highs, new lows, because we're getting to the upper end of this area that we've been in, we saw a bit of an expansion of the new highs, which is helping our 5-period moving average and our 10-period moving average. Accumulation distribution showing some improvement here. We're crossing back above a declining moving average. If we can get back above that, have the moving average turn back up itself, that would improve things. Short term, here's our very short term rainbow, where we're going above the 10 and the 20 and starting to get into the 30 area now. So this is showing some improvement, but these are the short-term moving averages. Our rate of change based on 10 periods, we're starting to get extreme positive. So that's roughly going back 2 weeks, 10 trading days. Stoke RSI looking a little extreme positive, as is the Williams percent R. The force index, it's not at the Keltner band yet, showing some improvement. So this is not necessarily extreme, and it's still positive. The Swinland Trading Oscillator showing improvement based on price and volume, and not extreme currently. So just because we're becoming overbought with some of our indicators doesn't mean we have to stop there. We could still go up from here, or we might hit overhead resistance and start to go down. Colon Oscillator, this is looking a little extreme positive, but it could still go higher from here. And then our 20, 50, and 200-day moving average study is showing improvement and not necessarily extreme, where the short-term stochastic, yeah, that's pretty extreme positive, but it can camp up here for a long time, just like it can camp down at extreme negative. Intermediate term is still showing some improvement, and the long term. So all of our stochastics are pointing higher now. Intermediate term, we got above the 20. Now we're starting to deal with the 50, and this is the 50-period exponential moving average. Right now it's acting as resistance. Can we get above that? Will this act as resistance and start to come back down? It's the simple moving average that most of the investing world tends to use. So if we do go higher and get up to this red line, that's what we really want to watch for. Here's our moving average tree. Haven't shown that in a while, where we're back above the 20. We're starting to run into the 50 down here that I just showed, but all of the moving averages are still declining overall. Going back 50 periods, we're still extreme negative. So this could give some support to prices going up. Sean trend meter showing improvement. Our PMO is also advancing based on price and volume, and the PMO, when taken together, is also going up. Looking a little extreme with the PMOs that are rising, showing some improvement with the buy signals, starting to get a little toppy there, but showing some improvement with the percent of PMOs in the S&P 500 that are above zero. Chaikin oscillator crossing above the midpoint. That is turning more positive. Chaikin money flow still negative, but showing improvement. And we dropped off with our volume. The vortex continues to be positive with the green line on top and the red line underneath. The summation index coming up based on price after being extreme negative is improving, and volume, which actually led the way higher, is also showing an improvement. All of our oscillators are now pretty confirmed positive. The EPI looking better after getting above this 30 level. It's starting to advance. If we can break above this area here, we're going to see the BPI really start to improve. Ease of movement actually turned down slightly. Ultimate oscillator also turned down, but is still above the midpoint. Money flow index kind of going sideways currently. And these are some charts I haven't shown in a little while. Our CCI going back 14 periods is starting to look a little bit overbought, as well as of the 20 period. And this is more of an intermediate term indicator. TTM squeezes might be a little hard to see here. These are really faint blue bars here, but this is turning more positive. The red dots just mean beware, beware. When they turn to green, that's when it's more convincing. At least that's how I read that indicator. This is another interesting thing. The balance of power actually declined slightly. And our CMB composite is looking more positive. We want to see if it's getting to an extreme point. It still could go higher. Our charts seeing some improvement with the Heiken Ashi with open candles. We're turning back to positive on the Kegi. Haven't seen that. They've been red for a long time. Now it's back to black. The Renko is still negative. Our 3-line break is looking more positive, and it's seeing this as resistance. Can we break above that? We added another X on the point and figure chart, so this is continuing to improve even though there's no signal that's been generated. The elder impulse for the S&P continues to be positive, as it does for the SPY. SAR continues to be positive with the dots underneath, and we're still in more of a pale purple with our go, no-go system, showing some improvement with our 50, 150, and 200-day simple moving average. And going back 200 periods, we're trying to come out after giving an extreme negative reading. That's much longer term. Special case, still trying to turn up, but it's going to take a while for this to really cross above the moving average. Going back 250 periods, we're coming down to the COVID low and trying to turn up. Actually, it's still declined a little bit. We've got a little ways to go before this chart's going to look better. The diamonds are neutral, or not neutral, they're positive right now. They were able to break above this moving average and are showing improvement. And we got above this resistance level here at R1, and we're above the 50-period moving average. This is probably the best looking chart right now. Can it continue? Will it try to run for the 200-day moving average? The Qs are still positive, still have a ways to go before they get to this moving average. And we're still underneath the pivot level. They just weren't behind the big move in Monday's session. We need to see this really take over. And we got some really crazy data coming up on here. The Vixen actually ticked up a little bit in Friday's session. The NASDAQ also didn't really participate as much. We're still below the pivot level. The mid caps were above the pivot level, but not up to the moving average yet. Small caps, the Wilshire was able to get back above the pivot. That's positive. And kind of the line in the sand, these are levels are good for the whole month. If we're above the pivot, that's considered positive. If we drop below the pivot, that's considered negative. So that we see indexes coming back above the pivot, that's turning things more positive. But we're not seeing that with the NASDAQ yet. The Dow had a nice up day and is looking fairly good from a chart perspective right now. We're not seeing quite the advance in the transports, and we're seeing kind of a negative divergence here with the utilities. They don't really seem to be breaking out. Currently, the dollar was virtually unchanged, but down slightly, but still in an overall uptrend. The S&P to the dollar still having a tendency to go in opposite directions. Gold was down 0.33% and still in an overall downtrend. There's a lot of really, I don't know if any of you are real gold investors, but there's some real interesting, I don't know what the dynamics, I guess, for lack of a better word, that are happening in the precious metals, not only with gold, but with silver, that might suggest that at some point gold is really just going to skyrocket, but that's not what we're seeing right now. And silver also was down almost 0.5%, down to its 50-period moving average. Oil dropped a little bit, down to 84.58, and the S&P and oil are still having a pretty strong tendency to go in opposite directions. And bonds were down slightly based on price, and we're still breaking down here with the World Bond Index. Here's our yield curves. The 10 to the 5 is still inverted. Here's what changed. The 30 to the 5 finally went back. Now, can it stay regular, or is it going to drop back down and be inverted again? It's kind of been chopping around in there. The 10 to the 2 still remains inverted. And the 10 to the 3 month is still not inverted. It spent one day last week being inverted, only to pop right back up, and it's still not inverted. Here's the yield on the 10-year. It just shows how interest rates have just been going up big time here. And we're breaking out, even though we were up in the session on Monday with the 10-year yield at 4.234%, 4.25-ish. Then the 30-year, it closed up at 4.40 and is just breaking out of all resistance. And even though the 2-year is still in the lead, it's kind of flattening out, and we're starting to see some lines crossing in here currently as interest rates are all jockeying around. The correlation, stocks and bonds, okay, after going for a long time in the same general direction, now they're having a tendency to go in the opposite direction. And the S&P to the 2-year, after going in kind of opposite directions, now they're having a tendency to go in the same direction. That we might be seeing a real shift in the market. That's when we see something for a long time and then it just drastically goes the other way, the market might be rebalancing. Here's the S&P to the 10-year. After spending a long time going in the opposite direction, now they're having a tendency to go in the same direction. And tech sector to the 10-year also really seeing a real switch there. Just an update with our scenarios. We're seeing an improvement with the 19-day exponential moving average of the advanced decline ratio of the S&P. This has been bouncing up, and we're actually positive based on price and volume. After giving us an extreme negative reading, sometimes that gives support to the S&P. Will that happen this time? Is that what's happening now? Seeing a slight improvement with those stocks above their 200-day simple moving average after giving us a pretty extreme reading. It is showing some improvement. And those above their 50 is improving with the S&P, the mid caps, and the small caps. So our setups and are really showing some improvement. Can it continue? The 10-day average of the S&P highs minus the lows, not changing real drastically because this is longer. And we've been chopping around sideways quite a bit, but this is showing some improvement. But we've been faked out before here. So we need confirmation of this. The broad market, looking at the 5-period moving average of the highs minus the lows, is showing some improvement, but it's still negative. And then our equity put call ratio, after spiking up, continues to drop overall. And that is one of our possible positive setups. Small caps still are above the daily pivot. They underperformed in Monday's session, and they're still below their 50-period moving average. So it just shows how the S&P has been outperforming as this has been declining. And then we did see a little spike up here in the recent past, and this could be giving some support to the S&P, which is the blue index. Our rotation, this really isn't helping us right now. The Qs to the S&P, declining, maybe taking out this low here pretty soon. We're discretionary against the S&P, also declining. We're seeing a little bit of an improvement with the large cap growth against large cap value. And then with the mid caps and small caps, they're not really turning up all that much. So has that rotation already happened? And so the big boys, the smart money, are they just going to ride things out now? Because it doesn't look like they're really adding a lot to those positions. Just pure speculation, just a thought I had as I was recording things here. This is also looking more positive too. The S&P to the utilities ratio, as utilities have been suffering and the S&P has been outperforming, this quite often gives us a bottom in the S&P. And so far, this seems to be holding up. We're just going up and up and up with our 2-year yield, so we don't know if we're at some kind of a spike right now. The staples showed some improvement, but they're in a downtrend overall. So we're still working off of this major spike right here, and we have not been able to get back above that. And this can often give some support as well. The Copic curve looks like this signal is still looking viable for the time being. Our praying bottom fisher is still giving us a signal. So what's our outlook then? The technicals are improving, but they could be becoming overbought. And I didn't put on here that we might be hitting into resistance areas. The Monday after positive options expiration day can be weak. Not this time. Kind of got that one wrong. That's why I have a real hard time with generalities. When they say, 54% of the time it's weak. Well, that means 46% of the time it's not. So there's always room for exceptions. That's why we don't want to just take blanket statements and then make decisions based on those. On Tuesday, we have the FHFA housing price index coming out, the Case-Shiller home price index, and consumer confidence. And then here, I've kind of changed this up a little bit, the Russia-Ukraine situation. I've turned Ukraine to gold because of the deployment of the 101st Airborne. That could really escalate things big time if Russia decides to counter with some kind of a move. There's still the pipeline that you're not hearing a lot about. And I don't know if this is true or not, but I watched something over the weekend that said maybe the US was behind this after all. But that's pure speculation. I don't know. I just don't know on that one. And then we have to be aware of that. And then the things going on in China, they're still being really strict with everything. And then their president going in and taking out the previous president. And they're really cracking down big time on the folks there and on the control there. But the market is still really fixated on inflation and interest rates. Oil seems to be under control. We have earnings coming out. The Fed continues to be in their silent mode, muted. Japan, again, something that could develop into the future, but is not really influencing things right now. The UK with their new prime minister coming out, and then, of course, the midterm election. And I kind of copied and pasted this. I've taken away the down scenario for right now, although we still have a lot of headwinds that could shove us down really fast if some of these things happen. The technicals are turning positive, but at least in the short term and a little bit in the intermediate term, they're starting to become overbought. Okay, that could push prices back down a little bit. So we're kind of going with the up scenario because the technicals are positive, but starting to get overbought. See, there's always warning signs every day. Our scenarios are looking a little better. Our rotation is not looking better. and some of our other setups are starting to show some improvement. The technicals are showing improvement. We're possibly regaining some moving averages, but we have a lot of overhead resistance. If we can get above some of these pivot levels and these fib retracements and previous highs or lows, that could really help the technical picture. That could also act as resistance and feed more into the down scenario. Can't really go sideways right now because even though the ADX is above 20, it is weakening. So maybe if you're a little more aggressive, you are more neutral because we're still chopping in this range, even though the ADX is not picking that up, but it's still negative overall. So our conclusion, the S&P is turning positive, but becoming overbought. That's if we see more follow through from here to the upside. We're turning more positive in the short term and intermediate term, but because we've been chopping around, we get to an overbought condition pretty quickly where we're still negative in the long term. So thank you. Have a wonderful Tuesday, and I hope you have a great week. And I hope if you're a Houston fan or a Phillies fan, that your team, although they won't be playing till later on in the week, I hope your team wins, whoever that may be. And I'll prepare the next video after Tuesday's session.